I know your time is valuable, so I'll get right to it. Throughout this episode, I'll be giving out the exact strategies that took me from £100,000 in bad debt to building a $13 million portfolio. But this journey has given me more than wealth. It's inspired a mission to help everyday people like you take control of your financial future. So every week, my team and I pour everything into bringing you market updates and proven strategies because we genuinely believe that everyone deserves financial security. No gimmicks or empty promises, just real insights from someone who has walked this path. And to help spread these insights to others who need them, I truly appreciate if you could subscribe to our channel. When you hit that button, you're telling the algorithm that our content is valuable, which helps us reach more people who deserve this opportunity. You're joining a community dedicated to financial independence for everyone. If you do subscribe, here's my promise. My team and I will make this show better for you every week. We'll listen to your feedback, answer your questions, and continue supporting your journey to financial success. So thank you for being part of this mission.
Hi everybody and welcome to this episode of the Lunchtime Investor. We are really excited. And I'll tell you why, because the whole idea behind this was that you spend a few minutes literally in your lunchtime, you eat, we do the talking, and you build your wealth so that you have choices later in your life. And this is episode number 9, how to spot trading and investing opportunities. And we have here Keith Sullivan.
Good afternoon, everyone.
Good afternoon indeed. So what are we talking about today? How to spot trading and investing opportunities. How do we do that?
So there's a lot going on, right? We've got a lot to talk about. Bitcoin making all-time highs. We've got the public breakup of Elon Musk and Donald Trump. I think that's definitely interesting to talk about.
Sounds like they were married, the public breakup.
It really does, right? And then I think Elon took it a bit too far with some of the posts that he was posting.
Oh, really?
Yeah, a bit too far. But overall, we're going to talk about how that affected the brainchild of Elon Musk, Tesla, and how we can find an investing opportunity there.
Actually, David here, immediately. By the way, hey, everybody on the chat, whether you're watching this live or whether you're watching this a little bit later, David is saying there seems to be a lot of hype on Elon Musk's upcoming AI IPO. What are your thoughts of getting in early with a few bob? Brilliant. Okay, well, let's make sure we talk about that because you are our IPO. You just went into an IPO, did you not? The Circle IPO?
Yeah, got in today, got a bit of a pullback on Circle. If you don't know Circle, they create the USDC stablecoin. So they are another crypto company that's become public and regulated. And
regulated, very important, that one.
And I got in, hopefully, if it gets triggered, at 10% drop.
Yeah, because it went massively up, right? You didn't get into that.
No.
You were waiting for a pullback, and now it is, what, 10% below when it opened up at IPO?
So it's 10% below the high that's created. So
the high.
It went up 25, I think it was 25% the first day, then another 20%, then another 7%, and then we've had a bit of a pullback.
Flippin' egg, you must be bullish on that if you got in at minus 10%.
Yeah, 100%. It's one of, if you have a look.
100%.
No, but if you're looking at the new financial system, what do you need? You need a stable coin. USDC, could that be the stable coin for banking systems across America?
Could be indeed. So listen, BTC, Bitcoin, reached 100 and, well, it went to 110 today.
110, yeah.
110. So it's near its all-time high, right? Should we go in with BTC or should we wait for something else? What should we do? It's going in the right direction. Woo!
Yeah, so as a smart investor, let's just say that.
Is that you?
Yeah, that's us. Come on.
Oh, us.
It's
okay.
what we teach.
Well, yeah, I agree with us. Yeah.
But as a smart investor, what you always say is you don't jump on the FOMO, the fear of missing out. There's always going to be pullbacks. Bitcoin showed it. It made an all-time high. It pulled back around 15, 20%. So there is always going to be opportunities there. And the fact is, if you haven't got into Bitcoin now,
then you should.
You wait for that pullback.
Oh, I see.
You wait for that pullback.
I was preempting what you were going to say.
You were. But again, there was always going to be other opportunities. If you didn't get into Bitcoin, we're going to talk a little bit about Ethereum. Could Ethereum be the next one moving forward with institutional money?
Really? Because Ethereum, I always say this on the show, is that like Solana's eating Ethereum's lunch. But for real world assets, that's what you keep saying, is that Ethereum is the one.
For decentralized finance, Ethereum is the foundation.
Okay.
A lot of DeFi is built on
It's very slow, though.
It is very slow.
It's very expensive.
But if you have a look at what they're trying to develop, then that can fix the scalability issues they've got, the cost issues as well. Now, it's all hearsay, and this is why you don't just jump in because of hearsay. But when you're seeing institutions really pumping money into Bitcoin, into Ethereum via ETFs, I think it was a couple of trillion going in there over the last 3 weeks. That is showing you that they are bullish at the moment with Ethereum.
Okay, well, let's have a look. We've got some slides on that, but also, let's see, we've got a couple of comments here. And we've got C Silver. Is this De Silva? Who is C Silva? Chris,
Yeah.
it is Chris, right? Yeah, he's awesome, right? Okay, so thanks for being here. Mahesh says, how to enter into newly listed company. Let's do that when we go into stocks. We'll talk about the circle thing, etc., and so forth. But you're thinking Bitcoin, wait for a pullback. But what if there isn't another pullback?
There's always going to be a pullback.
No, but
but if you have a look, every time you go, what about if there was another pullback? What about if there is another pullback? You just say, right, if I can't get into Bitcoin, can I ride the tailwind of Bitcoin, which is the altcoins?
Okay, so you're talking about altcoin or altcoins. Is it altcoins or altcoins?
Yeah, altcoins. Alternative coins.
Alternatives, so it should be altcoins. Alternatives, altcoins.
But just ride on the tailwind of Bitcoin, because once Bitcoin dominance subsides and more money
and
comes
is that
out,
happening? Is that happening? Is the dominant, because it was going up and up and up, was around 60-something%.
Yeah.
And now it's coming down, which means the altcoins are starting to move up, including Ethereum, right?
Correct.
Would you really class Ethereum and the larger ones as an altcoin?
If you look at the state of the market, they are alternative to Bitcoin, so
but they're not. See, I caught you there. See, originally, right, write this down, everybody. Right, the original altcoins were alternatives to Bitcoin.
Yeah.
Right, like Litecoin, like Shiba Inu. They were alternatives to Bitcoin because it's open source and people. And now everybody just goes altcoin. Everybody just calls everything altcoins. But
what do we do here in Invest Mastery? We simplify, right?
Oh yeah, well, we do. Oh wow. Do you know? Okay, fine. That is, wow. Because I just asked him, what is our mission? And he said to help as many people around the world achieve financial freedom for themselves and their families through financial education. That's my personal purpose, right? But the mission of Investment Mastery is to?
Simplify. Simplify finance, education.
You're getting close.
We're getting there one step at a time.
Yeah, to simplify investing so that anyone can achieve, well, we've got variations, financial independence, or take control of their finances. Okay, very good. So let's see. Do you want to show this chart or not?
If we could quickly show this. This is basically showing us there are 2 seasons.
Well, you click on this because there's a lot of information on here.
Yeah, so we're not really going to pay too much attention there because it's just a chart. But what?
Chris, you're right. We missed education.
Education.
It was
education.
to simplify through financial education. I don't know my own mission of my company. Help me.
But what we're basically looking at here is this figure at this point. So the lower the number, the stronger Bitcoin is against the overall market. So Bitcoin dominance technically is going up. Yeah. And the more we move away from the lower number to the higher numbers, we're coming more into altcoin season.
I mean, we are far, if that's the case, if that dot needs to move to the right, we are far away from altcoin season.
You say that, but a couple of weeks ago, we were literally right down at the end here.
So it can change really fast.
Yeah, it does change relatively quickly. And this is basically showing us that people, when it got to an all-time high with Bitcoin, what were they doing? They were taking profits, and they weren't just sitting on their money. They weren't just sitting on their hands. They were looking at putting their money to work elsewhere, and that's the power of compounding.
Okay. Anything else on this chart?
On that, not yet, but we will keep everyone updated. As soon as we go into the blue territory, we'll then start seeing altcoins.
It's nice of you to share a new chart. Normally, it's the fear and greed index. Let's not mention that this time around. Okay. So this is really interesting. Okay, because apparently, BlackRock, which holds something like $11 trillion worth of trillion, by the way, with a T, trillion, that's a lot of zeros, under management or assets under management, has bought 35.2 million worth of Ethereum just like yesterday. What do you think about that?
I think it's, number one, a great step to be more diversified.
It's nothing. They hold 11 trillion. This is 35. It's like you putting in $200
to Ethereum.
It's nothing.
No. But
Solana.
But what we need to realize is the bigger picture here. ETFs. Ethereum ETFs have become live last couple of weeks. Okay. Institutions can start to really invest.
What do you mean? There weren't any Ethereum ETFs before that?
You're seeing that they are regulated now. So you've got the BlackRock ETF. I think it was something kind of the last 3 weeks of 1.1 trillion inflows into Ethereum ETFs.
Well, actually, BlackRock has bought 267,000 Ethereum worth $673 million in the past month. Now, that's a little bit better.
Yeah.
Although that's probably 2,000. You putting in 2,000. But it's a start.
It is. And again, it's just a foundation. What we wanted to see is regulation coming to crypto. That's the first point. And the second thing is not to be dependent on one asset. What it used to be right now is Bitcoin ETF, Bitcoin ETF, Bitcoin ETF. Mm-hmm. Now we've got Ethereum ETFs. We might have Solana ETFs. We might have XRP ETFs. So there's a lot more diversification that they can have as investors. And the second thing, when there's more regulation coming into play, do they really need an ETF? Could they buy the physical asset, just like what they do with stocks? But they won't do that until there's more structure.
Right.
And I think this
so
is
at the
the first
moment,
couple of steps.
it's all about
ETFs.
ETFs. And isn't there a Solana one coming up?
Solana and Ethereum are the next ones on the board with the SEC.
What do you mean Ethereum? I thought you just said...
No, Solana and XRP.
Oh, you and
Ethereum.
XRP.
No, but they're the two. They're the two.
It's like if XRP was a person, they'd be married. Absolutely incredible.
Soon enough.
I think there's a poll going on, by the way. Which cryptos do you prefer to invest in, right? Ooh, this is interesting. Can we end the poll? Oh, right, well, maybe we should tell people about the poll first. Right, well, let's do a countdown. Ready? 5, 4, 3, 2, 1. Everybody vote. Let's close that poll. And the results were 55% said altcoins. Only 44 Bitcoin. Is that because it's near its all-time high?
Yeah, because there's a...
But that is the most... Because if you think about cryptos being not as stable as other assets, then, Bitcoin is the most stable of all of those, the most secure, the one because it is a what's it called, a store of value. But that's interesting. So people really want to make a lot of profit. They're looking for alpha.
Yeah. If I ask you a question, what would you rather go for? A bigger upside or safety with the investment?
But that depends. Are you asking me? Or are you
Yeah,
asking?
no,
Because that's the question you need to ask yourself, right? For me, it's a mixture. So I am in Bitcoin. That's my biggest holding, and then it is Ethereum. Just so you know, and then it is the chain links and the Solanas, etc., and so forth. And Sajid said right now for sure, all coins. It's all coins all the way.
Because there's always an opportunity there at this moment in time. But
What?
when you go into altcoins, you've got to do your own research. You can't just get.
Are you looking at this?
If XRP acquires Circle USDC, it's going to strengthen crypto.
XRP is going to acquire Circle?
Well, we don't know yet. It could be on the books.
You don't know yet. You guys are in cahoots. You're making this up.
Working. But XRP is looking to become regulated as well as a company. Ripple is looking to become an SEC regulated company.
Interesting. So if you look at the Ethereum chart, so you're all about altcoins. So let's have a look at the Ethereum chart for just a moment then, right? It just seems to be like going down, then it's going up. Are we showing it? Yeah. And then it is going down and then down and then down and then it's going up. What? It just looks like a sideways market. It's just been going sideways.
Yeah, at the short term, if you look at the last couple of months, we have been oscillating, moving sideways. But there is a lot happening in the background. This is what I like. When I look at a chart with, does it have the potential to go higher in price?
It does.
I would be looking at, first of all, are we oscillating in price? Meaning no one's really buying, no one's really selling.
Going sideways.
Price relatively high.
It seems to be that's what it's doing, right?
That's what it's doing. In the background, is there a lot of catalyst, let's just say, that's going to cause price to go up? And there is. There's inflows to the ETFs. There is a lot happening with Ethereum, and people are price targeting in the next couple of months that Ethereum could go to $3,800, $4,000. Which then takes it back up.
I think when somebody's new to this, they look at this chart and they go, well, how do I make money?
Yeah.
It hasn't moved, right? So over a year, it hasn't really moved. And I look at this chart and I say, how can you not make money? How can you not make money with a chart which just goes sideways? Because all you do, and this is the strategy, right? This is our crypto cost averaging strategy, is you wait for a fall, right? If you're in a bull market, it's minus 10%. If you're in a sideways market, it's minus 20%. If you're in a bear market, i.e. down market, it's minus 30%, right? Yeah. So you adapt that. And then you get in at predetermined levels to get your average price down. Look, you'd be in profit right now.
100%. If you follow the strategy, you took the high and you invested on the way down, as you just rightly said, you would be in profit from the average cost.
Just starting to be in profit.
Yeah.
Right? Maybe even, actually, yeah, you probably would be. And there's also, so we don't really care if it goes up or down, which is really interesting about our strategies. By the way, if you do want, or you don't yet know the strategy, it's a wonderful strategy. I've been using it for 25 years and then adapted it for cryptos the last 8 years. It works extremely well, especially when you're starting out. Then you can download, can you download it? You can download, right? You can download the crypto cost averaging strategy in a booklet. I think it's a 24-page booklet, so an easy read called The Lunchtime Investor. Just like the show, actually.
Yeah.
Oh, interesting.
It's strange.
Okay, so like most people, this volatility, like somebody who's starting out, they're like, look, I understand property. It's, and then you always knock. You've got to do this when you talk about, it's
tangible.
It's there, But this thing just goes up and down, and I love volatility.
Yeah.
So volatility and this fear and greed aren't really to be avoided. That's an opportunity. So if something comes down, most people, when it comes down, they're like, but that's the time to get in, isn't it?
100%. And it's all about how your emotions dictate. Imagine property having 20-30% drops before
Right.
it goes up.
I mean-
how would they react? If the property market drops 20%,
That would be amazing, no? Isn't that when people start getting in?
that's where you want people to start getting in.
Okay,
but
let me
people
ask
panic.
the people on the show. Okay, so if, let's say you were looking to get into property and the property prices fell by 20%, would you go, now be honest, would you actually go, oh, I'm not going to get in right now because it might fall further? Or would you go, bloody hell? Well, you might not say bloody hell, but you might think, oh gosh. And then, you know, would you get in or not? I'd love to do a poll on that. Can we do a poll on that? I thought you were writing a poll. I was giving you so much time to write the poll there. All right, we're just about to do a poll. If a property, like the property market, fell by 20%, would you go, oh, now's not a good time? Or would you go, blimey, something that was, 100 grand is now 80 grand. I can get in for 80 grand.
Correct. But
So, well, don't give away the answer, but that was the correct
but
question.
that's the correct question.
That was the correct question. So would you get in or not? I'd love to know. Everybody please vote. I love the way, this isn't skewed at all. It's yes, exclamation mark, exclamation. How skewed is that question? Just imagine it just says yes or no.
Leading them towards the answer,
Yeah, I
the
mean,
promised land.
Just a little bit. So go ahead, please. And let's do that poll. You should see the poll coming up here. We're going to do this a countdown.
Yeah.
It doesn't take that long,
No.
surely. All right, 5, 4, 3, 2, 1. Boom. What's the answer? But right, okay. So, oh wow, now I'm going crazy because 100. Wait, it said 100%. Right. Oh, that's interesting. Some people are trying to time the market, right? 93% of you said that if a property goes down 20%, you would get in. Why don't people do that then with stocks?
Because it's not.
It's not.
It's not tangible.
Oh, I'm sorry. If you buy a company, right, like Microsoft or Apple or Google, not recommendations, and you were basically, they make billion. I'm not talking about turnover. I'm talking about profit. They are so profitable. You think what they're going to go to zero suddenly or what?
I think what a lot of investors, new investors to the market, do is if they see share price drop 20%, in their head they link a drop of 20% of a share price means the company itself has dropped 20%. Dropped 20%
right.
in revenue, net profit,
Yes.
amount of staff they've got, properties they own.
They've,
and that's not the case.
They've sold all 20% of their factories. They fired
Yeah.
20% of their stuff.
And that's not the case.
They
Because
haven't.
What did we always say is the share price is not directly linked to the company itself.
Price does not equal value.
There you go.
That is one of the most important. We should do a whole series on that. Price. Listen. Price does not equal value. That means, like, if this is the value, and you could line up 10 people and they'd all argue what the price is, right? These incredible analysts that earn 180 grand a year, they can't decide, right? But anyway, so let's say this is kind of the value, and the share price goes up. That doesn't mean it's now valued more. The share price goes down the next day. It doesn't mean it's worth less. It's just the market doing what the market does. Who does not see that as an opportunity? Please tell me. And by the way, if you then go into a bear market where it carries on going down, isn't that even better? Just change your time horizons. And people go, oh, I can't wait that long. Well, with property you do. You wait years. Why? I don't get it. Honestly, please somebody tell me why. Why?
Yeah. And I think one of the things that I look for is a divergence there where price is falling. Are the fundamentals of the business going up? Is there something that people go, right, there is fair value now, meaning it's too cheap? Yeah, it's 1 o'clock. It's
keep talking.
Eating time.
This is the Lunchtime Investor. Keep talking.
But
Zoom on him.
Zoom on me.
Yeah, zoom on.
But again, it does really come down to are the fundamentals of that business going up? Because if the business is growing its revenue, if the business is growing its net profit, if the business is making new products, if they're worldwide and price is falling, surely for me, I'm like, okay, this is way too cheap. Now it's my time to get in. And again, it's not just I'm going to try and time the market because you can't. It's relatively tough. Emotions get involved. What you want to do on the investing side is spend time in the market. And what Marco just said there is valuable, right?
Marco.
This is why your strategies are so valuable. Zero emotions in investing. Just follow the strategy.
So important. So when it goes up, what's the emotion?
Nothing.
Oh, okay. When it goes down?
Nothing. There's no
I
emotion.
mean, I get a little bit more excited, but generally speaking, it is nothing. It's like, if it goes up, we're in profit. If it goes down, it's an opportunity to lower our average cost.
Yeah.
That's it. And that is why we're talking about mission, right? So I was at Dennis's wedding, by the way. I gave them away. I was the, what's it called, the efficient. It was beautiful. Right? We were in Bled. I'm going slightly off topic, but Bled, which is about half an hour away from Slovenia, which is, I don't know why we were there, but it was wonderful. In a castle, on top of a hill, looking down on a lake. I tell you, the most beautiful fairy tale wedding. Absolutely fantastic. But I took a day off afterwards to work on the mission and the vision but above that, a movement. Mm-hmm. And I'm getting there. Let me get some feedback here from everybody. You're the first to hear it. He doesn't. I haven't discussed it with anybody yet, which is around placing or having I'm still working on it. Right, profitable investing tools in every household, like every household. Mm-hmm. Because I believe that everybody, look, with AI coming along, do you know how many jobs are going to be made redundant? You know, it's going to make people more effective first, but then it's going to make people redundant, and companies are always looking at their bottom line. Listen, there are going to be either people that invest or the others, and they're going to suffer. But if you are not making at least more than inflation on an annual basis, so whatever, it's quite low at the moment, but let's say 3, 4, 5%, because you want to make some profit, you are going to be in trouble. This needs to go into every household. It's simple. It's not easy. It's like riding a bike. You need to learn, right? Or driving a car. But it's so simple. Let's go.
What they say, it's simple in theory, hard in practicality. Mm-hmm. So you can understand it, but it's actually when you get into it, are you able to do it?
But once you do get it, you've got it forever. 100%. It's like driving a car. Give me some feedback here about, because we really want to create a movement that everybody comes on board and says, do you know what? Yes, let's get it into every household. Obviously, some households don't have a lot of time. Some households don't have a lot of money. But let's get it in there. Let's start. You can just start early with your kids and put, 10 pounds every month. Then at some stage, it's 15 pounds. But let's get started, So that's what we're doing. Okay, thank you. I'm going to read your comments in a moment. Well, I'll get him to talk again. Volatility and fear, therefore, they aren't threats.
No.
They're signals.
Correct. They're opportunities.
They're opportunities to either to get in or to get out. Mm-hmm. That's all it is. If we reframe a word, it's like, people don't like salespeople or selling, right? But why don't you reframe that word to adding value? Or service. That's right. Be of service, or offering something, or helping people. Change the word. It changes your life. So volatility and fear. Let's go with volatility. This thing here is they're just signals. Signals to buy more. Signals to start selling. That's it. And if we reframe that in my mind, I think we're good to go. Now, could this be a signal? Let's talk about this love affair, but very quickly, not about the love affair. Let's talk about this. Trump and Musk.
Yeah. So there has been a public bust-up, let's just say that there, of what was happening with, obviously, Donald Trump, Elon Musk. At the beginning of Trump's rise to power once again into the US, we had Elon Musk, his right-hand man, ready? He was being the person that was really doing a lot on the social media side, investing money, all for a bigger purpose of, okay, I'm going to get a lot of tax cuts here for my Teslas. I'm going to have a better position being in Tesla.
Trump always said he never asked for anything, though.
That's the point, right? And now came out that Trump went, right, these tax cuts and what you were getting is all coming to an end. We're going to remove them. And then this is where Elon Musk obviously kicked off and then went very, very public with what he was saying. And he
does own a public platform called X. Anybody heard of Twitter?
But the last tweet kind of went way too far.
Now that's interesting. So it's no longer called Twitter; it's called X. But they still call it a tweet. Yeah. Do they not call it the last X?
No. But I
think the branding's off there. Right, let's get to it. So basically, boom, it's exploded. Right now, what does that mean for the share price? Can we have a look? Can we just share this? Right. So this is Tesla. Now we've moved into stocks, right? Yeah. And don't forget, we had some questions on there about getting into public companies as well. So look at this. Now this again, look at this. Look at this sideways movement, right? Look at this sideways. They haven't had a stock split or anything. Oh, well, there's an S there. What's that? Is that a split?
That's a split.
Oh, they did have a stock split.
So middle 22.
Higher. Oh, that's interesting. Okay. But otherwise, you would say this pretty much has been going sideways, right? Mm-hmm. Which is such a great thing. So we make money when going up. We make money sideways. We also make money going down. We just want to make sure that it doesn't go to zero, right? Now, look at this on the right-hand side. Look at this massive fall here. That's quite a big fall, right? Would you say 25%? Mm-hmm.
Correct. One of the biggest drops. It dropped 14% in a day, which I think was the biggest drop since 2020. with Tesla.
Now, most people, again, building on what we said before, this is fear. This is like, oh my goodness, the whole thing's going to go to zero.
Yeah.
Is Tesla going to go to zero?
No. In my opinion, based on the fundamentals of what's happening with Tesla, I would just say this is all noise. Okay. Everyone runs on fear. Everyone's like, oh my God, there's so much going on. But what I would always look at is with what's going on the social side, is that going to stop Tesla's revenue? Is it going to cut net profits?
Well, it is. It is going to.
I don't think it is, because there's a lot of people siding with Elon.
Well,
if you have a look at
No, but here's the thing, Keith. Listen, I'm not getting into politics here, but the left, they're...
Yeah.
Are they? I don't know. Well, are the more likely to buy electric cars if Tesla. Now, this is the point. If Tesla is all about electric cars, which it isn't, right?
No,
we'll come on to that in a moment. But if that's the case, now they seem to be against him at the moment because he joined forces with the other guy we won't mention, Trump, and therefore the left didn't like him and stopped buying the cars. The right are more kind of, and I'm really generalizing here. I do realize that. They're more petrol guzzling, more likely, right?
Yeah,
I'm really
Mustangs.
generalizing here big time, right? So therefore, he's kind of lost his audience. And didn't sales drop as a result?
This is the point. Sales in Europe dropped. If you look at the grand scheme of things, once again, this is just noise. Because what makes up most of Tesla's revenue? The US and China. They make up around 75% of Tesla's overall revenue for the business. They are not being drastically hit at this moment in time. If I'm starting to see US sales drop, and I know that makes 50% of Tesla's revenue, then yeah, okay, we're going to have to look at that as a warning sign. But when you have something like, there was a news article to create fear about German sales of Tesla dropped. I think Germany made up around 3% of Tesla's overall revenue. And this is the thing of when you start looking at this in the bigger or grand scheme of things and not listening to the noise and do what others are doing and not what they're saying, there is always going to be a great opportunity with Tesla. Because if you have a look at Tesla, what's happened, yes, it's been moving sideways, but we've had 30, 40% drops, 50% recoveries, 30, 40% drop, 50. The last recovery from low to high, the last couple of weeks, is over 70% from the lows. If you've invested since December on the way down, you've got a good average cost. We've got members that are making 40, 50, 60% on the money invested.
Yeah, I must say, I've definitely, I'm still in. I mean, I should have sold at 500, but I didn't because I think this has got a lot more to go. It's now come down, giving us an opportunity to buy.
Yeah.
And so for me, I don't know whether I'm going to buy more because I've got quite a lot in Tesla already. The question is, are you getting in? That's what I want to know.
So on my side,
Walk the talk.
Yeah, walk the talk.
Put your money where your mouth is.
We actually had this conversation on last night's webinar, and the answer for me at this moment is I'm not getting into Tesla. And that's not because I don't believe in Tesla.
That's shocking.
I know it's shocking, but what do we always talk about? Being diversified. Don't have all your eggs in one basket. I already have 3 tech investments running at once. Okay. I have 8 maximum investments I take.
Yeah.
3 of the ones that I've got currently running are technology. Right. I don't want to be overexposed to that area of the market.
Are you talking about stocks or cryptos?
Stocks. So now I think, okay, there's an opportunity to invest into a tech or discretion. Well, you can dictate which one this is.
Well, let's go on to that because Patricia is saying Tesla is not only electric cars, right? So for me, the play here is, and which isn't in here because obviously they haven't sold any yet, is the robotics.
Yeah.
But also, what about the whole driverless car thing? So there's lots of things going on. It's also a data company, it's also a battery company. There's so much going on here. And but that's SpaceX. Is that?
Yeah,
that's not
still,
part of Tesla.
I think they'll merge at
But that's
some
not
point.
part.
No, but at some point,
You don't know that.
No, you don't know.
Oh, hello. Do you think it's a good time to invest into? There was a poll going on apparently.
We didn't.
No one tells us anything.
No.
All right. Yes, 91% of people say yes. But are you going to do it? That's what I want to know. It's easy to say yes. I mean, he's saying it's brilliant and he's not going in. But I'm in. Don't worry, people. No, I'm with you.
Wait, let's I'm going with one of our golden rules we teach investors. Be diversified. And if I don't follow that golden rule, what's going to happen?
That's true. So what are you so invested in that you think is better than Tesla then?
So at this moment in time, what I'm coming in is AMD. I think AMD has a long way to grow.
Okay. Are you in NVIDIA as well?
I was in NVIDIA and I made 35%.
It's not a bit diversified, is it?
Well, but you can have 2 in the same industry.
Can you?
You've got the leader and you've got the second one.
Should try harder. The number 2 should always try harder.
Always.
AMD.
But they're making a lot more money, AMD.
Are they?
And they're starting to take market shares when it comes to data centers.
Their share price doesn't seem to be doing that much.
Well, I'm back to break even now after a year.
Yeah, after a year. So we're willing to wait. It
Yeah.
doesn't have to be immediate. And this is the other thing that people are, for some reason, they believe that when it comes to stocks, they need to make money immediately,
No.
whereas with property, they can wait years. What is with these double standards?
No.
You know?
But another thing, if you have a look on stocks, we can make all of our returns tax-free via SIPs and ISAs. So why would you want to not wait for the best opportunities?
Hold on, what is it? The issue is the source, I think it's they source the components like rare metals due to China. Are we talking about what, batteries here, or are we talking about Tesla? Because the one thing about Tesla, I understand, is most components are manufactured by themselves, so they don't have this chain and they don't rely on lots of different companies and all this. But the source of it. But I don't know whether you're talking about electric cars. Maybe it's the battery of it.
Well, I think if you have a look at what was happening yesterday in London, which a lot of people didn't know, there was the USA and China meeting again for trade talks. And I think this one was more around minerals. So that could, if there was a deal struck, or when a deal is struck, that could positively affect Tesla on a good way, right? Because if there's no tariffs going on the minerals that are coming from China, then that is always going to be a good sign.
They've got a stranglehold on that, haven't they? The rare sources or resources. Okay, so anything else that we're doing? We're coming towards the end of the show. Any more questions? But we did have a question, didn't we? So how do you get into a company that has just gone public? Does anybody want to hear how we do that? Hopefully, yeah? I'm just going to say that's a yes then. Everyone's saying yes here. Hopefully they will in a moment.
Yeah.
There's always a delay. So how do you get into public, somebody who's a company that's just gone public?
It's number one risky to get into a public company that's just being released because you have minimal information that you know about this company when it comes to the fundamental sides. They slowly get released. So the first thing that I'll always do is invest little amounts of money compared to what I do with the bigger companies. So I have less risk on the table.
Hold on a moment. I got to stop you there because what's very important is that we don't get in before it goes public, right?
Yeah.
There are ways of doing it, I guess. I always
Very
get this
tough.
offer, but yeah, very tough.
I've tried
You've tried
numerous
and
times.
failed.
Yes.
Okay. It's big of you to admit that. And then once they go public, generally speaking, nobody knows, they don't know, the market doesn't know what the price should be. So there's a mass volatility.
Correct.
And that is bad or good?
It's good.
See what you learned on this show.
It's good.
Yes, it's good, right? It's an opportunity because as it goes hopefully down, especially if it goes, I have to say, because you're going 10% off the new high, it's shot up and now you're going in. For me, I like to, whatever the price is and it goes down. I know it didn't, but that would be my entry point.
That would be no.
You're just very bullish on it.
Yeah, that would be a better entry point. And unfortunately, what I would like to see happen with IPOs is the day they're released, the price goes down. Why? Because the people that got into the pre-IPO get out at profit because it's the first time they can actually start to sell.
True.
So then I'll have a nice little bit of a drop, get in, and then the market goes up.
And I don't generally let it run too much. I'm really only interested in a very quick 10 to 15% because you could be in a lot of pain for a long time just in case the institutions that are working with it, the Goldman Sachses of this world, have totally overvalued it, you know. So for example, Raj is saying, what is the ticker for Circle? Can you remember? What the ticker is?
CRCL.
CR? Okay, let's do that in the military thing. C for?
Charlie.
Romeo.
R for Romeo. C for Charlie. L for Lima.
Let's give that a big round of applause. That's awesome. Oh, thank you, Dennis. Amazing. Rare earth elements here, Patricia's explaining. Crucial components, electric motors. Electric motors face significant... Electric motor, right. I don't know why. I didn't think they had a motor. That's so stupid. Of course they have a motor. Face significant challenge in the EV industry, particularly for Tesla. Yeah. So, Hurgzrum 10, I mean, that is not a name, I can tell you that. If you weren't in the tech space at the moment, should Tesla be my priority? What would you recommend here? What would be your tip here?
Are you trying to
Yes,
reel me
I am.
in there?
I am.
Number one, we can't recommend anything.
That's right. This is for educational purposes only.
But a lot of people see Tesla as still one of the largest 7 companies, the Mag 7, and people do tend to buy the dip. Fundamentally, the company is still strong. They have a large amount of products that they offer. They're diversified in different areas of the market, as we just said, and it's not just the cars. So I do think it could be a good opportunity as long as you DYOR, do your own research, and minimize the risk that you put on the table. and then have a strategy. Don't just jump in. A lot of people
please
jump
get
in.
the strategy. You can find it below in the notes. Okay, get a strategy. This is so important. Listen, there's no ifs, buts, or maybes. You should not be investing unless you know the rules of
Correct.
when to get in, i.e. what price, where, which one, do you go for Tesla, do you go, okay, maybe that's the first one. So where, at what price, right, how much money, and then the fourth and fifth are exit points. So those were 3 entry points. Then the last 2 are exit points, i.e. when do you get out with a big profit, or when do you get out with a very, very small loss. And talking about that, Sibylla is asking, when do you pull out? Is it 1 to 2 days? It's got nothing to do with the days. It's got to do with the percentage that I'm looking to make, and I know that in advance. So here, I honestly, a quick 10% is absolutely fine. I'm not being greedy here at all.
I think this is more IPOs as well.
Yeah, that's IPOs.
So
IPOs.
a quick 10%.
Yeah.
If you look at ARM, it went up. It dropped. You would have got in. It went up another 20%, and then it was falling lower and lower and lower.
So that would have been your second entry point. Sorry, you're the second time round. So you would have gotten in, made a quick profit, pulled out,
and then
as it went down again, you do the same thing again. Okay? Chris, you're amazing. Do not invest without a strategy. Plan for entry, exit, and depending on the strategy, a stop loss. If you're trading, you always use a stop loss. Write that down, peeps. When you are trading, always use a stop loss, an electronic order that gets you out whether you're there or not. How can you imagine having... You don't have that in property or business, or internet marketing, a stop loss. We have a stop loss. It minimizes your losses. What is there not to love about this, make sure when it comes to stocks that you do have a strategy, and that again is in my book, The Lunchtime Trader. So not the Lunchtime Investor, the Lunchtime Trader book, and that is over 100 pages worth of 25 years of trading and investing experience. Get your copy. Get it now. Grab your copy now. Grab your copy. Yeah, start there. Okay, anything else you'd like to add?
No.
Any more questions from anybody?
We've pretty much covered everything we need to have covered. So,
by the way, please do submit your questions for next time. We're going to change the format slightly moving forward. We might have another one like this, but then we're going to change the format. We're going to have one particular topic that we're going to go really deep into. Okay, but if you have a topic, if you have something, especially as a beginner, that you think that you or your family, because I'm serious about this mission, about getting this information, profitable investing strategies into every household. They have to be, because I'm telling you, things are changing and fast. And if you're not investing, and people say, but I'm not an investor. You are an investor. I'm not saying you have to trade. You don't have to up, down, in, out. You don't have to do that. But at least start investing in an asset that is going to make your money work for you. You work hard enough. You don't want to have another job you do 8 hours here, do 8 hours here. I suppose you could, right? You could, just about. But how about getting your money to work hard for you so that you work smart?
Yeah.
Okay? So...
And Marco's just asked a great question there. What one has higher return, trading or investing?
Oh, that's interesting. But that's the age-old debate, isn't it? About, is it trading or is it investing? Hey, why don't we do that as a topic? Maybe that's let's do that. Can we add that to the topics? Thank you, Marco. Let's do that. But now we are going to... I got to have my lunch, man. It's 1:24 and, in England we eat at 1 o'clock. Okay. Yeah. Thanks, everybody. Thank you.
Thank you, Marcus.
And thank you to everybody on the chat. See you.